What's going on, guys? This is going to be our summary of markets week 41. We're going to go over the different markets, then we're also going to get into our options watch list for the week. So let's get started. So starting off, obviously, we have SPY. We talked about SPY last week and how that if you weren't already long, it would have been a little risky to long that because you weren't really offering any pullbacks. The strength on the buy side was pretty low, and there was also 4 to 5 gaps below you. Right after we made that video, it actually saw a massive gap up on Monday. Off the top of my head, I can't remember what the news was, but there was news that came out on Monday that led that to gap up. And you had a massive gap up, but then as the week went on, there were a couple of bad announcements that came out from the Fed. You also had stimulus talks. They were saying that they were not going to have a stimulus before the before Biden takes office or Trump takes office again in January. Basically, whoever takes office in January, most likely Biden, they're not going to have a stimulus until then. So that was pretty bad news for the market. The market started selling off, and then he basically just ranged for the rest of the week, and nothing really happened. Now, looking at this current price action, we have a little bit of a short-term accumulation. You could consider this almost a bulldog on the 1 hour. We called this out in Discord right on the bottom. I talked about how if it wanted to bounce, it was going to be right there because that was going to be the 1 hour bulldog. That's exactly what it did. It put in the 1 hour double bottom, popped up, and then now we're currently putting in kind of the head of the bulldog. I also said in Discord that any bounce below 360 was going to be a bull trap, and I still believe that. I think any bounce below this point of failure around 360, 362, somewhere around there, I think any bounce into that area is going to be a trap. And so far it's held true, but we're gonna have to see how we open on Monday. Monday is going to be very crucial. If we gap up into like 362 and it continues higher for the rest of the day on Monday, maybe Tuesday, then that bull trap scenario is most likely going to fail. Okay, so I'm not going to be bearish all the way up. Basically, the reason I was so bearish was if we look at the S&P 500 futures, you look at the ES, look at this on a weekly. This candle was actually horrendous. It was really bad going into Friday. The wick was really massive. And then on Friday, we had a pretty strong day. You can see we pushed up towards the close and it kind of saved that weekly candle. If we did not have a bullish Friday, this would have been one of the worst weekly candles on a top that we have ever seen in the history of ES. And I've gone back and looked at all these candles that we put in kind of on tops or near resistance, and we've never had a candle like this. It typically does not put in massive candles. Like we had one kind of similar back here when it puts in a big wick, but that was kind of towards a low. We've never really had any candles like that towards highs, towards resistance. Okay, so this could be one of the worst candles we've ever seen when you're pushing into an all-time high. So keep that in mind. It definitely doesn't look super bullish. If you stay below like 362, I would say this is going to be a trap, and you most likely will go down to at least fill one of these gaps. So maybe down. This gap's kind of already filled, but I'll mark it out anyway. Kind of around 350. You have a couple of gaps around 340, 336, 330, basically all the way down. You have gaps. So be on the lookout for that. I wouldn't be extremely bullish until 360, 362 is gained by the bulls. Now, going a little off topic, but I did post a ton of analysis in Discord going over why I think that this is a very risky place to long and why I kind of think that there is a massive correction coming within the next 1 to 2 months. Now, this is a little off topic. Like I said, it's not for this week. But in the grand scheme of things, I want you guys to understand that we are seeing ridiculously extended put to call ratios if we look at the indexes. Okay. And the put to call ratios, basically what they tell you is they tell you how many people are taking puts and how many people are taking calls, and what is the ratio of those overall trades. Now, typically, if the put to call ratio gets extremely low, meaning there are a lot of people taking a ton of calls and not that many people taking puts, that typically means that a top is incoming, and vice versa, right? If there's a lot of puts being taken, not a lot of calls, most likely probably a bottom incoming. It's kind of a contrarian way of looking at the market. Now, looking at these numbers here, this was the put to call ratio being put in on Friday, okay? Now, the total put to call ratio is a little misleading because there is a lot of hedging that goes on with the indexes and the futures. So like the the SPX, the OEX, that is the S&P 100 index, looking at the large cap companies in the S&P 500. So if we take a look at these two numbers right here and this number right here, this is the index put to call ratio. These are telling us kind of what the smart money is doing. What are the hedge funds doing? What are the big traders doing? The guys with massive accounts, right? And the equity put to call ratio is kind of telling us what the small guys are doing. People like us, the speculators, the day traders, right? That is kind of going to tell you what the small people are doing. And if we look at these together, what is it telling us? It's telling us that the small guys are extremely extended to the call side. They are taking a lot more calls, basically double. They're taking double calls than they are puts, okay? And then if we look at the index funds, the index are very extended to the put side. And what is that telling us? Typically, when you look at the indexes, those are hedges. The hedge funds are buying puts to hedge their positions, or they're buying calls to hedge their positions, right? So looking at the index numbers, 1.4, 1.5, 2.06, these are extremely extended to the put side, meaning these smart money traders, these hedge funds, are taking a ton of puts to hedge their position, meaning they might think that this is probably going to be topping pretty soon because they are constantly hedging as the days go on. These numbers are continuing to rise. So keep an eye on this. We're going to talk about this again next summary of markets, and we're going to see kind of what the difference is from this week to next week on the ratios. So just keep that in mind. Long story short, it looks like a lot of the smart money guys are hedging their bets with puts, and the speculating side of traders are extremely extended to the call side. So there might be a top incoming within the next month or two. Not obviously within the next day or two. These put to call ratios can be very early, but just understand what those ratios are telling you. All right, sorry, that was a little long-winded, but let's move on. So gold, it hit that pivot that we talked about during the last summary markets and basically just got obliterated after it heard the bad news about stimulus. As soon as they heard there was not going to be any stimulus anytime soon, the gold market crashed because you basically you want there to be stimulus if you're a gold trader because that's good for gold. You hurt the dollar, you benefit gold and silver, right? So no stimulus is bad for gold. So until we get some good stimulus news, this is probably going to continue to bear flag or just continue to range as it is. If it does continue lower, watch that 1800 retrace. Looking back at oil, oil didn't really do much. You pulled back, you broke out to a resistance level, you failed resistance, and now you're pulling back again. But really, there is nothing happening besides range in these two levels from 43 to 33. It's like a $10 range, very, very volatile range. And that's what oil likes to do. Oil likes to be volatile. But until you really find value above 43 or below 33, this is probably just going to be a violent range for the next few weeks to maybe the next month or two. So don't get chopped out trading oil right now. I have not been trading oil for quite some time, and I'm not going to be trading oil for the next few months. Until oil finds some value above or below these levels, I'm not interested, and I don't think you should be either. Moving on to Bitcoin. Bitcoin topped out right on that fib target that I gave you guys around 16.3. That was the fake out level, and we're seeing that fake out level do exactly why it is called the fake out level. It is faking out of that level. So 16.3 is resistance. You're not able to break it. Until you break that level, you are not bullish. If you do break that level, watch 17.3, 17.6. Until then, most likely going to pull back. Watch your soft fib around 15,000, 14.6, and 14.3 buy zone. The buy zone has already been tested. That was that last breakout that we talked about last week. You had the buy zone tested here, and then it led you into the fake out level. So nice little trade there if you took that. But currently, you're seeing a massive bear div on the daily. I think there was a bear div on the 4-hour as well. Yeah, loss in momentum here, failing the pivot. So you look like you're rolling over. So I would not trade this bullishly until you find value above 16.3, or you find a lot of support kind of around that 15,000 range. Anything in between, probably going to chop you out. Same thing for Ethereum. Ethereum basically hit our fake out target that we talked about last week, 482. You front ran it a little bit, and then you started nuking. So anything below 482 would be bearish, and you would be looking for support around 431 and in the buy zone around 408, 419. Okay, watch those levels. Anything in between, not worth trading. All right, that's the summary of markets. Let's move on to the options watch list. I've got a couple things that I'm watching here next week. Let's start off with Teladoc. So Teladoc, I'm probably looking to enter some shares on Teladoc. I'm not going to buy any options on this, I don't think, for right now. But I am looking to build a share position. I do like... Where is the rectangle? I do like this big support that is coming in. We kind of tested it already, and we have a lot of support left, kind of around the 140 to 180 range. Because this range is so big, that is why I am not interested in taking options here. I'm probably going to start dollar cost averaging into shares if we continue to fall into these levels. If you do continue to go higher, maybe fill the gap here, I will also pick up some shares. This is a long-term play moving into 2021. I think the telehealth industry is going to see a boom thanks to coronavirus. Now, obviously, this is a pretty late trade. This was getting a boom back when coronavirus first started, but I think this still has some room to run into 2021. So any telehealth stocks, I think, are going to do well in 2021, and I think Teladoc is going to be one of the biggest ones. So I'm going to dollar cost average, probably start this week and go into next week as well. Just keep an eye on these lower supports, kind of around 160 to 170. If we move on and look at some pivots here, you can see there are a couple of pivots here. You have a daily pivot around 160, and then I believe there are some 4-hour pivots down here as well. Yeah, you have a 4-hour pivot right around 160 as well, and then you have a 4-hour pivot right around 179. So a lot of support coming in that range. Keep an eye on that. Moving on, Pinterest. I really like Pinterest here. Massive uptrend. You can see you're tested kind of on that pullback, and now you're breaking higher. That's not the main reason I like this. Let's take a look at the pivot chart. I like Pinterest because you have a massive close right above that pivot. You came down to retest the trail. It gave you a buy signal, and now you're pushing higher. We're waiting on the Momo to catch up, but as soon as the Momo catches up, this thing could go into all-time high. I think Pinterest, will be one of the biggest gainers of 2021. I think Pinterest is going to see a lot of volume moving into 2021. So I'm looking at probably picking up some shares. I might even take a short-term option trade on this. I don't know just yet, but just keep an eye on Pinterest for next week. Keep it on the Discord, and I'll let you guys know how I'm going to play this. But I definitely want to take some kind of position in Pinterest this week. Moving on, CVS is a big gainer the past couple of weeks. I think they are going to continue to gain into January, into February as well. So once we start seeing those vaccines come out, I think CVS is going to see a big boost thanks to that vaccine, because I think they will be one of the administrators of that vaccine. So keep an eye on CVS. I think CVS will do well into the winter months, especially with flu season coming up as well. It's a little extended to buy here. You did just break a pivot. You broke a resistance, but I'm more so looking at this for a pullback. We took a day trade on this, which we actually did very well on Friday. I took a same day expiration day trade, and we went ahead and closed that for 70% gain before it expired. I might day trade this again next week, but I also want to pick up probably maybe a midterm position on CVS on a pullback. But if it doesn't pull back, I'm probably not going to pick it up. So keep an eye on this. If we do see a pullback, let's see. A good zone to watch would be, this would be pretty deep, but if it does give us a pullback to around 65, 61, that would be a really good zone to watch. Also, if you start to break 73, you could look for a breakout trade into 80 as your target. All right, moving on to AMD. I like AMD here. You had a little bit of a falling wedge. You broke out, you hit our target, and then you actually hit our bearish target as well on that pullback. But let's go ahead and delete these targets and kind of look at what AMD is doing currently. So we can see there's almost like an inverse head and shoulders coming in on AMD. So as long as we stay above, I'd say $81, this looks like it wants to go higher. So keep an eye on this little range right here. Let's actually take a rectangle tool. If it starts to find value above like 81.70, this could head higher into the 83 to 85 range. So keep an eye on this little reversal pattern here. If the markets look very bullish next week, AMD could definitely continue higher into the 83 range. So watch out for a break above 81.60. Let's actually put an alert on this so we don't miss this trade. If you break below 81, I would not be interested in this. It would most likely be going lower, maybe even a gap fill. All right, so Walmart, we called this out last week. Sadly, I did not trade this. I was too busy trading other things. But this was a very clean trade. You had a bearish channel. I said as long as it stayed above 147 and you broke above 148, this was going to go higher. You broke above 148, came back to retest that channel, and then rocketed a lot higher. So now we're back above 150. So if we go ahead and delete this, let's look at the daily. You can see we are clearly breaking resistance, okay? You have resistance right up here on this high. You tried to break it here and then failed on that nasty sell-off. And then you had a retrace candle gapped above it. And we've seen buy pressure ever since that gap, okay? So taking an anchored VWAP, you can see the buyers are definitely in control here. You're breaking away from the anchored VWAP. Let's even look at the 8 moving average as well. Look at that, 8 moving average, you're rocketing above it. So a little extended, but if we do pull back to that resistance or even around 148 and we hold steady, I think this is a very bullish play for next week. Now, if we look at the pivots, I called this out in Discord. I said above that pivot, above 146.70, it was going to rocket higher. So as long as you stay above that pivot on the next pullback, you do have earnings, so watch out for earnings. But as long as you stay above, I'd say 147 after earnings, you should continue higher. Keep an eye on Walmart. All right, moving on to NEO. NEO, I told you guys was very extended, but any pullback, if you were looking to enter, I would enter on shares, not on options, because you are so extended, you don't want to be buying calls up here. But buying shares, maybe dollar cost averaging into shares, wouldn't be an awful idea. I'm not entering shares until maybe if we start breaking back above like 46, 47, but I would like to wait for earnings. I might buy some shares after earnings. I might buy a little bit before earnings just to play the earnings, but not a whole lot. I think I want to take my biggest position in shares if we start to gain above like 47, 50, 48, or if we retrace down towards these lower gaps around 37, 38. So if we come back down to these lower gap areas, I'll probably start to dollar cost average into some shares to play long term. But until then, I really wouldn't recommend buying calls. It's pretty extended. If you bought calls, it would probably have to be on a day-to-day basis, going for shorter term plays. But keep an eye on this resistance kind of around that 48.50 range. You can see we gapped up and then we filled that gap. Okay, so keep an eye on that area, kind of where we gapped up. as that breakout signal. All right, moving on. I called out Starbucks in Discord for a day trade. I talked about how you were putting in kind of a falling wedge here. I think you also had a bull div. No bull div here, but you did have a gain in momentum. So falling wedge, you were gaining momentum. You broke that falling wedge to the upside. So as long as we don't reclaim this wedge, if you do fail downward, this would be a very typical thing. You do see falling wedges get retested very often. So this could pull back to retest the wedge. That would still be bullish as long as you stayed above that that recent low. Okay, so as long as you maintain that recent low around 93, a pullback is viable. Now you don't have to pull back. If you start to gain above this high here and you start to gain value, you could keep that uptrend and break into that resistance. Okay, so keep an eye on Starbucks for a short-term trade. A pullback would be viable, and a solid consolidation gaining value above this resistance would also be bullish. Okay, so keep an eye on those two scenarios. Moving on to Baba. I called out Baba in Discord a while back because it was retesting this pivot. Okay, so you had a pivot here, you bounced on it, and then you had a very nice bounce, but then you retraced. So you're currently still bouncing on that pivot, and you're putting in a new pivot. So starting like Monday and Tuesday, if you consolidate above these pivots, this is still bullish with a very tight stop loss below the pivots. Now you are definitely downtrending, so I wouldn't go too hard in a position in Baba, but it does give you a very tight stop loss if you put your stops below these pivots. Okay, so watch for a gain in value above these pivots, above 260 next week. If you do gain value above 260, you could go higher into that gap fill around 290. Okay, so very good risk to reward. DraftKings was another one that I was watching in the earnings. I didn't want to play the earnings, but I want to see how DraftKings performs for the next few days after earnings. You don't have any pivots really resisting, causing resistance here. You regained most of your pivots. You can see back here, you had a lot of resistance. So if you stay above, I'd say 44 for a few days, maybe Monday, Tuesday, this could 100% continue higher into that 53 pivot. Okay, so keep an eye on that. Watch that uptrend that you're forming. If you stay above this uptrend, pushing into that that gap fill or that 53 pivot could be very possible. Okay, so watch this little resistance. You want to kind of consolidate above this, and you could go for a run into that upper gap. Now, if you do break lower, keep an eye on this because this could put in. Now, this might be something we talk about next week because it's going to be a few days. But if this does go lower, keep an eye on this. It could put in a bulldog where you push higher like this, or you could put in an inverse head and shoulders where maybe you put in a new low and then you kind of consolidate again. So this could be bullish in the next 2 weeks or so. So we'll come back to this next week, but I'm going to keep this on my radar for the next few weeks. It looks very bullish. Okay, so Rocket is another one that I'm watching. I'm actually in shares and I have options on Rocket. I have a midterm, kind of a long-term position on options on Rocket, and I also have some shares. I like the way that it's holding up after earnings, and I like that price did not really nuke after that buyback news that they released. Okay, so you had a falling wedge on this. Do I still have that drawn out? Yeah, right here. So you have a falling wedge on Rocket, which is breaking out to the upside. Now, we could come back, just like I talked about on Starbucks. You could come back and retest this falling wedge, and that would still be bullish. So maybe we sell off a little bit on buyback news, but that would still be bullish. Now, I'm already in a position. This is my stock position. My stop loss is kind of around $18. My target is around 31. So this is a pretty long-term stock position, and I'm looking to buy more shares on Rocket depending on its next move. So if it pulls back and it still finds a little bit of buy pressure, I'll add some shares. If we break out and consolidate, I'll probably add some more shares there as well. So keep an eye on Rocket. I don't think I have any tech plays that I'm keeping an eye on, but we'll take a quick look at these to see if I can see anything obvious. Okay, so Facebook actually doesn't look too bad here. You have this triangle that I drew, and then you got very volatile. You were not respecting that triangle. But look at this consolidation. It looks like it's ready to rocket. So if you do break out upwards on Monday or Tuesday, and you stay above this old uptrend, this trend right here, if you stay above that old uptrend on Monday and Tuesday, you could continue higher into this upper gap around 293. So keep an eye on that. A very bullish Monday or Tuesday would be strong for Facebook. Netflix, not really a trade on Netflix, but you are holding that pivot. So if you wanted to take a very low risk, very tight stop loss trade, you would just put your stop loss below Friday's low, and you would trade that to the upside, looking for the gap fill. Understand that Netflix loves to fill its gaps, so we most likely will fill this gap very soon. Amazon and Tesla, I don't really have any trades. Actually, Tesla, you do have a trade on Tesla here. You have a ascending triangle, or you can even look at this as a bilateral triangle on Tesla. Either way, this looks very strong going into next week. I'm trying to make this dotted here. There we go. So if this maintains this uptrend here for Monday, Tuesday, if you wanted to take a very low risk, tight stop loss trade, you would basically be buying this on Monday or Tuesday with a stop loss below the trend. Now, give it a little bit of room so you don't get wicked, but that would be a very low risk. If you wanted to take shares on that, that would be a very good share play. Options might be a little riskier, but same thing. Your stop loss would just be if price breaks below that trend line. Now, you could continue higher and fail on this trend line, so keep an eye on that. You are going to have some resistance moving into 427 and also around 450. You break above 427 and 450, this could go into all-time highs very quickly. So keep an eye on this pattern. This could be the pattern that leads Tesla into all-time highs. Okay? That is it, guys. That is the summary markets and the weekly options watch list. Hopefully you guys enjoyed this video, and I will see you guys for our live trading session tomorrow. You guys have a good one. Peace out.